Hi guys, this is Chauke. I hope you guys are okay. In this lesson, we're going to be going through financial indicators, and I hope that as we do this, you guys will be able to understand. So, like I said, we are going to deal with financial indicators. One of the most important things that you need to make sure that you know and that you are comfortable with grade 10s is the issue of formulas. You must make sure that when it comes to financial indicators, you know your formulas by heart. Remember that as a business, whenever we start our operations, at the end of the year, we need to sit down and analyze what really happened. We need to analyze in a way that it is easy for anyone, for any person who might be interested in our financial statements to understand. So we are analyzing our the performance of the business, and we are looking into different categories of financial indicators. We have profitability ratios, whereby we are looking at things like your net profit on sales, gross profit on cost of sales, net profit on sales, and so forth. And then the second category that we have is what we call solvency ratios. Solvency ratio, we are doing it so that we can be able to determine if the business can use its total assets to pay its total liabilities. And the other one is what we call liquidity ratios. In grade 10, for liquidity ratios, we only have current ratio and acid test ratio. In terms of current ratio, we are trying to assess the ability of a business to pay its short-term debts. And in terms of acid test ratio, we are trying to assess the ability of a business to pay its short-term debts without depending on selling inventory. And then the last one is what we call return on owner's equity. Return on owner's equity, we are doing it so that we can be able to determine whether the owner should be satisfied with his return on investment or not. And most of the time, the return on owner's equity, it is compared with interest on fixed deposit, because we are trying to see whether the owner made a wise decision by investing the money in the business instead of investing it in the bank. So I hope that that brief explanation will help you as we do this. Now here they're saying we are doing question 3, and I've adapted this from the relab for grade 10 accounting. So if you want me to maybe share a copy of this with you, you're more than welcome to contact me using the details that you can get from our coordinator. So let's get into the lesson. Now, the first question here, they're saying that the information in this question was extracted from the books of Manyanga Traders for 28 February 2021. Now, number one, they are saying that we are required to do the following. 3.1, you must calculate the percentage markup achieved by the business. In other words, remember, when we calculate percentage markup, we are calculating gross profit on cost of sales. So by now, you should be able to remember the formulas that you should be able to follow in order for you to answer this. So we are going to calculate percentage markup on cost of sales. It is also known as markup achieved by the business, or just gross profit markup. So please make sure, guys, that when you do these things, you remember the formulas. So our formula says that for us to be able to do this, we are going to take our gross profit and we are going to divide it by cost of sales. So I'm going to write it here that the formula is gross profit divide by cost of sales. So we have cost of sales here, and then we will cost of sales here, and then we will multiply by 100. Now if you check this information, we are going to get it from we are going to get the information from the income statement. So what I will do, because I don't have enough space, I'm not going to write the formulas here, but I will tell you what you, maybe let me see if I can just try to write it in a way that you guys will be able to relate. So I think I might have to force to use formulas just so that I don't leave you guys behind. So I will just stick to using formulas, but unfortunately the space here is not enough. So I will just divide it into 3 parts. The first part we deal with the formula here. We'll deal with the formula, and then we do the calculation, and then the last part will be for the final answer. So remember, the formula for this says that we are supposed to have our gross profit over our cost of sales, and then it says that we are going to multiply this by 100. So the next thing that we need to do, we need to remember, where are we going to get this information? This information will come from our income statement. So this is where we are our gross profit is 175,000. So it means that we will say 175,000 over our cost of sales. Cost of sales, according to the information, is 250,000. So we'd say divide by 250,000, and then we multiply by 100. Okay, then from there we just need to swap this on a calculator. So we're going to say that 175,000 divide by 250,000, and then we say all of this multiply by 100. It is giving us 70%. So it means that the markup that we have achieved as a business is 70% for 2021, and this was about 3 marks. Unfortunately, they made an error here on the answer sheet, but we will go to the next question. The next question says give 2 reasons for the differences in markup percentages, and they're saying that we need to refer to information C. Now remember guys, information C is this one for financial indicators. Our markup percentage for last year was 100%. Now we are at 70%. So they want us to explain what is the reason for this decline, what is the reason for us moving from 100% to 70%. And there are normally 2 reasons that we give. Number one, it could be that we gave too much discounts. We can say too much discounts allowed or given. Okay, and then the second reason will be that maybe we had a theft of stock. Remember, if your stock keeps on being stolen, it means that you will not sell as much as you wanted to. So obviously this will have a negative impact on your profit. So this is one of the reasons that you guys can think about. And then 3.3, they are saying that we need to calculate percentage gross profit on sales. Now remember guys, when it comes to this, there are keywords. Ignore the word percentage, think about gross profit, and then they're saying it should be on, meaning that gross profit has got to be on top of your sales. Gross profit on top, your sales at the bottom. So the formula straight gives you an indication of how you should do this. So remember, I said for that we are going to calculate it by saying I'm going to still divide it into 2 parts so that I can remind you guys. Remember, I said we'd have our gross profit divide by sales, and then we multiply by 100, meaning that the answer that you're going to give should be in a percentage form. Okay, and then the next part we swap. So our gross profit, it is still 175,000. So we're going to say 175,000 divided by our sales, which is 425,000. So we'd say divide by 425,000, and then we multiply this by 100, and then it is going to give us the answer that we want. So remember, 175,000 divide by 425,000, and then we multiply this by 100. It is giving us the answer that we're getting is 41.2%. Remember, you must round off to 1 decimal place. So this number after 1 is 7, so it means this will change into 2. So we'd have 41.2%. 41.2%. And then the next last part of the profitability ratios says that we should calculate net profit on sales. Remember, when it's like this, I told you that it means that your net profit must be at the top, and then whatever that comes after on will be at the bottom. So our net profit, we are going to get it in the income statement as well. So here is the extract of our income statement. Our net profit is 59,500. So we're going to say 59,500 divide by sales. Our sales is still 425,000. So we'd say over 425,000 multiply by 100. When you substitute, guys, you need to make sure that you substitute the right information. So we are going to do this in a calculator so that you guys can see how we got the answer. So we're going to say 59,500, we divide it by 425,000, and then from there we multiply these by 100, and it is going to give us 14%. So I forgot to write the formula. Maybe let me write it so that I can remind you guys. Remember formula one way so that you don't make mistakes, because some learners, they forget to put information properly because they don't write the formula. So it is always safe to make sure that you write the formula just to remind yourself. Remember, this is about you who is writing. So remember, we're going to say our gross profit over our sales, and then we multiply by 100. So our gross profit, we know that it was 59,500, and then our sales is 425,000, as I said here, and then we multiply this by 100, and then remember the answer that we got is 14%, and then you will get your full marks. So remember, there will be 2 marks here, 2 marks here, 1 mark for this, 1 mark for this, and then also 1 mark for your final answer, also 1 mark for your final answer, and then 1 mark for these, 1 mark for this. So guys, you must really know how marks are allocated for this. For this one, it will be 3 marks, 1 mark here, 1 mark here, and 1 mark for the final answer. Remember, I said this was out of 3, not 1. Okay, so this is how we can easily get our marks. Next, they are saying that we need to list one reason for the decrease percentage on net profit on sales. Now, it could be that the reason why we have a decrease in that percentage, it could be that maybe, for example, let's check on our financial indicators. Let's see if we have something else in relation to that. Okay, so now remember, we had 24%, and then now our net profit on sales is 14%. So maybe the reason why this declined is because we had we did not have a good control over. We can just say the reason is that it will be poor control over operating expenses. So obviously, if our operating expenses become very much, our net profit will go down. So this could be one of the reasons. Okay, then next, they're saying calculate the return on average owner's equity. I normally tell learners to say that for grade 10, this is one of the most difficult financial indicators that learners struggle with. So now, what can you do when it comes to this? You start by the formula. Remember, return is represented by net profit. So meaning that we are going to say net profit over average owner's equity. Would say over average owner's equity, and then we multiply by 100. So when we substitute, our return is 59,500. So we'll say 59,500 divided by average is substituted by 1/2 into the sum of the two owner's equity, the one from last year and the one from this year. So here they are, 175,000 plus 225,000. And remember, all of this is multiplied by 100, and then we will get our answer here. Now, I normally advise learners to say, maybe if you struggle with this part, what you can do, you can just say, you can just take your 175,000, and then you say plus 225,000, right? And then it gives you this, you divide this by 2, it will give you 200,000. So which means instead of this, you would have 200,000 as your average, just that I don't have space here. So when you calculate this, you will say 59,500 divide by 200,000, and then you multiply this by 100. Your return on owner's equity will be 29.8%. So we'd have 29.8%. Then let's hear what the next question says. 3.7 says that should the owner be satisfied with his percentage return? Now, first thing that you must do, you must check, did the return increase or decrease? If it decreased, we should be very worried. And also, the return should be more than interest on fixed deposit in terms of percentages. So let's check also our financial indicator, interest on fixed deposit. So you can see it is 8%. So firstly, we want to check the return from last year was 23%. This year, the return is 29.8%. So the first thing that we must tell them is that number one, the return on investment has increased. So we'll tell them that return on investment increased by let's check the difference. 29.8 29.8 minus 23%, it is giving us 6.8%. So it increased by 6.8%. We can say from 23% to 29.8%. I just don't have space to be writing that from 23% in 2022, 29.8% in 2021. Okay, but that's how you can actually write it. And then for the second part, we can just say that his return is more than alternative investment. So it's more than alternative investment by, let's see, we would say 29.8%, 29.8% minus let's see here, 29.8 minus 8%. So it's more by 21.8%. So therefore the owner should be happy. Okay, so this is how you comment on a return question. Okay, and then the next one, they're saying that we need to calculate current ratio. Remember, the formula for current ratio says that we need to compare our current assets to, we are comparing this to current liabilities, right? So they just said we should calculate. There's no need for us to comment on this. They just said we should calculate. Very important. When they say comment, we'll comment. But they just told us to calculate. And a question like this actually requires you to comment. So that's what we did. So here we are just calculating. We just need to check how much are our current assets and how much are our current liabilities. So let's go to the balance sheet. So now, if you look at this, our current assets include three things. Remember, we would have inventory, trade and other receivables, and also cash and cash equivalents. So we are looking at these three items. For maybe you can show them that your current assets, for you to get it, you took 46,000, you added 12,100 for trade and other receivables, and you also added how much is this, 3,400 for cash and cash equivalents, and this is how much you got. So let's see. So we'd say 46,000 plus 12,100, and then also plus 3.4, and it gave us 61,500. So our current assets is 61,500. Remember, we said 46,000 plus 12,100 and also plus 3.4. So our current assets in this case will be 61,500. We are comparing it to, let's check if we are given our current liabilities. Current liabilities, according to this, is represented by trade and other payables. So we are comparing this to 20,500. So obviously this side will be divided by what is on the right. So, and also this side will divide by what is on the right, 20,500. Then whatever that we get, it should be something is to 1. So when it comes to acid test ratio, current ratio in grade 10, we divide by what is on your right hand side. Now let's see, we are just trying to see in terms of our assets, how much are we able to pay our short-term liabilities or not. Okay, so we'd say 61,500 divide by 20,500, and it is giving us let's see, 3:1. It is giving us 3:1. Okay, remember this 61,500. Let me show you how we got our current assets. Our current assets is 46,000, 46,000 plus 12,100 and then plus 3.4, and it gave us 61,500, which we divided by 20,500, which we gave us 3. So it means that our current ratio is 3:1. Now when we interpret this inwards, we are saying that for each and every 1 rand that we have in current liabilities, we have 3 rand in a form of assets to pay for those current liabilities. Okay, I hope this makes sense. Let's check the last one that we have to calculate. Now the next reason they are saying for 3.9, they are saying that calculate the acid test ratio. Now when we do acid test ratio, the formula tells us that we are trying to see the ability of a business to pay its short-term liabilities without depending on selling stock. Hence we substitute, guys. Hence we make sure that in that calculation we don't include inventory. So the formula says current assets, so we'd have current assets, then we subtract inventory, and then we compare it to our current liabilities. Now our current assets, remember, it was 61,500. So when we subtract inventory from this, it means we will subtract 46,000. So we are subtracting 46,000, and then we are comparing this to 20,500 divided by 20,500. So even this side we will divide by 20,500, and then from there whatever that is on the right hand side, when it comes to this, remember I said it's 1. So let's see if we say 61,500 minus 46,000, we are left with 15,500. So it means the answer for here is 15,500. So 15,500 divided by 20,500, it is giving us 0.8:1. So it is giving us 0.8:1. Now so it means that for each and every 1 rand that we have in current liabilities, we only have 80 cents in current assets to pay for those liabilities. This is very worrying for us. Remember, our debts must never be more than our assets. If it's like that, it's a cause for concern. Then the next question they are asking us, provide reasons why trading stock is subtracted when calculating acid test ratio. Now remember I said in terms of this, I'm going to just give you one reason. I said I'm not going to write it, but I will discuss it with you. I said in terms of this, we are saying that the reason why we are subtracting inventory, we want to see, is the business able to pay its short-term liabilities without depending on selling stock or not. Hence stock is not included as part of current assets in that particular transaction. So I hope that you guys have really understood this lesson very well. Please guys, make sure that you practice, that you go through your accounting work so that you can become a shining star of accounting one day. May God richly bless you. Shalom. Thank you for watching. Stay blessed.